Hello there. Yeah, welcome to the closing bell on the 4th of March. Recording this on the 3rd, of course, around midday. And we have been seeing a bit of weakness in this last month, haven't we? I've been sort of preparing you for it. And the market just teetering on the edge of some pretty important levels. So sort of ratcheting up the warnings, I guess, on what could be coming. And just will outline, what levels would prove me wrong, because that's always a possibility. But I wanted to start today with the financials in the Australian market. This is the Financials Index, the XFJ. And I just think it looks to me like it is tipping over again. We've had some weakness in the last week or two. You would have seen after some results, CBA, etc., getting hit pretty hard. And just interesting to me, the way the chart's looking on the financial index as a whole. Of course, where the financials go is where the ASX 200 goes. Such a big part of our index. If they fall over, you could expect to see weakness at the index level. So let's just quickly get stuck into it so I can explain it to you. This is the financial index going back to 2000. And what I'm looking at is this huge wave down during the crash of 08 to 09. You can see there that all the price action since has really been within that range. And you know that I sort of look at these key levels, the buy zone and the sell zone. So the buy zone for me being that sort of 12.5% to 25% level, the sell zone being the 75% retracement, and the to the 87.5%. It's just sort of a zone where I expect to see reversals back to the midpoint. So just expecting a higher probability that we'll see reversals back to the midpoint. And if you see how prices have moved in those financials over the last decade, it's been pretty good, hasn't it? Tracing it out. You can see the midpoint there in 2009, 2010, providing lots of resistance. Then we had a sell-off down into the buy zone area. That was good buying, back to the point of control. Big rally then. And you can see it's been just lots of resistance over and over in those financials at the top of that sell zone area. That's for the past, 7 years. It's been pretty good resistance, hasn't it? And after the financials have fallen over, look, they haven't quite reached back all the way to the point of control on each occasion. You can see it got pretty close, didn't it? Back towards that midpoint, rallying again, then getting hit from the sell zone, goes back through in that 2020 sell-off. Where did it go to? Back to the buy zone. There you can see perfectly. Then back through to the point of control again. I just want to really give you that sense of how these things move and how I look at them. So if we're looking at just the close-up of what's been going on in the last few years, you can see that we have more, stiff resistance happening at the top of the sell zone for the financials. That's for the last couple of years. We had the big sell-off towards the middle of last year. And this is where I'm getting interested in the way it's moving at the moment, is that I can then zoom in on that shorter term price action. And that's when I will, look at these big retracements again. We look at from the high to the bottom of that sell-off last year in those financials. You'll see that we had that initial wave lower, and where has it come back to? Well, it's rallied right back to the sell zone of that area. So this is just feeling like a topping formation taking place. It's been rejected. You can see also that it is in long-term downtrend. This is a monthly chart, and the 10-month exponential is below the 20-month simple, the blue line you can see there. So it is actually in long-term downtrend, and I like to see, after we have these retracements that occur along the way, if things sell off back below that 10-month exponential moving average while it's in long-term downtrend. And you can see here we're shaping up potentially for a monthly sell pivot this month. That is sort of my pretty strong signal saying, well, watch out, this can be ready for the next leg lower in the big picture. So it is just shaping up that these financials are looking a bit weak, and with interest rates continuing to ratchet higher than people expect, the higher for longer story. Australian property, well, we all know it's been going vertical for a very long time, and banks have certainly fed that for a long time. We have the mortgages rolling off from fixed to floating towards the end of this year. What is going to happen then? How high will the rates be? Will there be another big leg down in property prior to that or during that phase? So the banks sort of are exposed, I think, a bit as loan volumes go down. We saw that Lendy, a mortgage broker, just sacked 100 people. And there's more anecdotal evidence that properties are certainly taking longer to sell. So looking at the banks from that point of view and saying, well, I wouldn't be surprised to see them at least weaken a bit, or their margins be under pressure, or their bad loans to increase. And we have this setup, which is a bit of a rounding top that's been taking place for quite a while. This has been a few years in the making. And we certainly have what is the start of, waves down, where we have the initial wave. Even though you have big retracements, it's still tracing out what looks like the beginning of a potential downtrend. And in the big picture, we are at this, massive level that for a long time has proven to be very stiff resistance for the financials. And when they've fallen over, we have seen, at least a move back towards that midpoint. So, there is a chance here that we do see the financials tip over. And if they tip over below the low from 2020 last year, they can look pretty bad pretty quickly. So it's not often I will take up your time talking about an index like that, or a sector, especially the financials. They're very tricky, but it's just one of those setups for me that's pretty rare and looks interesting for more downside. And I think the fundamental picture is there. So if we look at CBA, and I think this is an interesting chart to give you a sense of what I'm seeing. This is a very long-term chart of CBA. It's a really strong stock. There's no doubt about that. Everyone owns it. This was a peak achieved in sort of 2015, 16. And the last period we've seen has really been a long-term distribution for the last year or two around that high. And the thought is, a double top type of formation potentially taking shape, where the false break of that high can see pretty good downside. And if we just go in close and have a look, there's been lots of work done over this last year or two where it really hasn't been able to rally. That would be the range I'm looking at with the point of control there around $100. And you can see it is setting up sort of a distribution, little false breaks of the edge of the range. We've just had that false break of the all-time high and then sold off pretty aggressively. And you can see potential for a monthly sell pivot taking shape. And we have already actually had one quite quite a few months ago. So it is just that sense of things are weakening. And we have that very important point that I told you about from 2015, 2016. So the momentum's certainly waning in CBA. If I was to look at that as a potential short, I mean, you'd have to have a stop loss above that all-time high at $111. But it does just look to me like it's rolling over, and there is a chance for it to have a bit of a sharp move to the downside over the next 3 to 6 months, let's say. Westpac is also rolling over and looks a lot weaker than CBA, doesn't it? Nowhere near a high reached back in 2015, and really is in quite a serious downtrend. And you can see it's been struggling, trying to bounce, but is starting to roll over again. It is in long-term downtrend on the moving averages. Again, we're falling below those moving averages. Another monthly sell pivot. So it is quite weak. And under $18 for Westpac is going to look pretty bad. So, there's a couple of banks out there that just look like they're rolling over again. Look, they're notoriously hard to trade, these things. I don't often trade them. I'm not telling you to go out and necessarily short it right now. If you were to do that, you'd have to give them pretty wide stop losses, because they're pretty dangerous old things. And people love to own them. So they find it pretty hard to go down. But if we're looking at that downtrend in Westpac, you can see this rally that we've seen recently coming back into the sell zone of the most recent wave higher. So that downtrend really quite strong. And it's just been trying to hold in there. That's what gives me the sense that it could be ready for another wave lower. The financials are probably the main story for today in the ASX, which could lead to, our whole index starting to tip over. And the S&P, of course, is the other big story. This is the daily chart, and I've been showing you the 200-day moving average, that line there in the middle, very important. If things tip over below there, because we are in long-term downtrend, what could happen? So the momentum could really shift to the downside below there. I've been telling you that's around 39.50, I think down to 39.40 now. But we're just testing that level. So I'm just wary what happens below there, whether that really kicks off some serious selling pressure. And big picture, the low from last October below there, very dangerous from the point of view of this rally from 2020. And it's the heat really coming out of it. And do we see another serious wave down in this bear market, which is what could be on the cards if we head below the low from October last year? And the starting gun would be failing below that 200-day moving average. So we're flirting with it at the moment. And look, it could hold in. This is where I can end up being, completely wrong. If I've got the big picture direction wrong here, what can happen is it's started to trend to the upside in the very short term. Remember, this is a daily chart. So if it is trending higher, this pullback is the buying opportunity back into the buy zone of that wave. And then if it turns up from there, basically finding support at the 200-day moving average, which will confirm that it's holding, and then it breaks out above the high of the move. And also, remember the 43.50 high I've told you about, the whole picture will change dramatically. And I will be bullish if we see, the support come in here and it turns up and breaks above those key levels, sort of 42.50 to 43.50 in the S&P 500. I don't think that's the favorite, but I guess this is when the market does strange things that no one expects. that's when it can go on a pretty serious run if no one is really long. A lot of the investors have a pretty low exposure to stocks at the moment. This last year of selling has caused that. So it is really that moment of decision. Is the selling pressure really there? Is this downtrend going to continue from the last few years? This is where you'd expect it to fall over from. All it's going to take is one bad night to really crack through that 200-day moving average. And all of a sudden, it could be on for young and old. We'd need some maybe bad news to get it going. But that is what could happen from here if it really does give way. So be aware of that. And yeah, I changed my tune if the support comes in and it takes off up through those highs. So good lines in the sand there for traders to know what their risk reward is, where to get out, where the stoppies are, etc. So hopefully that makes a lot of sense to the people who have been watching it for a while. It has been sort of unfolding as expected in this last few weeks. If it's been helping you out, leave a comment on the YouTube video. Would love to know. And I will come back with more next week. Cheers.